Hi everyone, welcome back to my channel. This video is my usual weekly or bi-weekly technical analysis outlook on currencies and stocks. I am making plans for videos that are related to currencies, stocks and finance in general, so please subscribe if you like such content. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's begin. As always, I will be making reviews of the names that I've mentioned in past videos. In this video, it'll be about Eurodollar, Sterling Dollar, Aussie Dollar, as well as equity names like Danaher, Infineon Technologies, and Royce. First up, Eurodollar last closed at 1.0838 on the 5th of July. Now, what I said in earlier videos was that Eurodollar was supported by the triangle support trend line. It bounced off this support 2 weeks and 3 weeks ago, and I said that this usually leads to an advance, and true enough, we can see that Eurodollar has advanced this week, and more importantly, it has closed above the 20-week simple moving average, and this, I believe, would again continue to lead Eurodollar higher. But nonetheless, I've said before, for symmetrical triangles, the outlook will be determined by either a breakout or a breakdown. We are heading closer to a breakout instead of a breakdown, but there is no confirmation. We need a weekly close above the resistance trend line in order for us to be confident that this is a bullish breakout, and the potential move is 795 pips. Next up, a review of the sterling against the dollar last closed at 1.2812 on the 5th of July. This is what we're looking for the euro dollar as well. Sterling dollar has a bullish confirmation. It has closed above the symmetrical triangle resistance trend line. This is a weekly close, so we have a bullish confirmation. This has a textbook target at 1.3961, which is about 8.9% move, a massive move in the FX context. Now, this is 3 reasons why you should not be overly excited about this textbook target. Number 1, such a high target is unrealistic in the short term because price action almost never rallies in a straight line. Highly likely price action is going to be something like this: move higher, move lower, higher again and lower again, and gradually it goes hopefully to the 1.3961 textbook target. Number 2, as said in earlier videos, textbook targets are just guidelines. We still have to look at the resistances that occur before textbook targets because these resistances are strong enough to reject price action lower, and this may prevent textbook targets from being reached. Number 3, in my experience, textbook targets are reached only 60 to 70%. So using this as a rough estimate, sterling dollar should be reaching just 1.35 to 1.36 sort of range. Now that there is a pattern completion, I will add this for future reference. After pattern completions, corrections to the point of breakout are common, though not always. So in this case, you should not be surprised if sterling dollar rallies to a certain level, possibly to some resistances, gets rejected and starts to correct lower to around the trend line before resuming to the upside. I'll be giving you 2 examples of how pattern completions usually look like. First one is on the dollar Swiss, which completed a head and shoulders top on the 3rd of June. Now, pattern completions usually occur in 3 phases. There is number 1, the completion, number 2, the correction, and number 3, the resumption. Here, it's clear that we have a completion on the 3rd of June via a breakdown below the neckline at 0.8995. We actually have had 2 corrections, one over here, which got rejected by the Ichimoku cloud, and second one slightly above the neckline, which is the generally ideal retracement to around or slightly above the neckline before getting rejected. So we have completion, we have correction, and now I believe dollar Swiss is headed for the bearish resumption phase. Textbook target at 87.63. The second example that I want to show you is on Volkswagen, which also completed a head and shoulders top over here on the 30th of May. Now, this one didn't follow the textbook. There is no correction. There is a completion of a bearish pattern. There was no correction, and price action just went all the way down to the textbook target at 110.86. This is not common. It's not just the sterling dollar that had a breakout this week. The Australian dollar also had a similar breakout of its symmetrical triangle resistance. Now this is even more significant. Australian dollar against the US dollar closed at 0.6747 on the 6th of June. There is now a bullish confirmation. Weekly close above the resistance trend line, and more importantly, it has closed above the Ichimoku cloud. Closing above the Ichimoku cloud simply means that it has entered into a bullish territory. So it's confirmed, bullish outlook has prevailed. The textbook target here is excessively high. It is at 0.7615. So do bear in mind what I've said about sterling dollar. Price action doesn't go in a straight line and immediately to textbook targets. It usually occurs in waves. It usually goes up, down, up, down, up. And also we have to look at the resistances. There are resistances, firm resistances if I may add, at the 0.6871 over here. And there is the psychological resistance at the 0.7 level. Finally, there is another resistance at 0.7155. So all of these resistances have a chance to reject price action lower and prevent Aussie dollar from ever reaching its textbook target at 0.7615. So the rule of thumb is every break of each resistance leads price action higher to the next resistance. So in the short term, it is very unrealistic to target 0.7615. Instead, we should be targeting first a move to 0.6872, followed by 0.7, the psychological resistance, finally 0.7155. We now move on to equities. The first name that I want to review is on Danaher, last closed at 239.25. Now, I first covered this name in the last video dated 29th of June, in which I said that it is forming a double top. And I said that I will comment more on this once this bearish pattern is confirmed. Now, we have had a confirmation. There is a breakdown below the neckline of 248.53 that occurred on the 1st of July. This bearish pattern is confirmed. The bearish outlook is confirmed. The textbook target is at 228. So the reason why I said there needs to be a confirmation before I can comment more on this is because I want to make, let's call it a speculation. I'm speculating. The keyword here is speculating that Danaher may not reach 228 so quickly because there is a support around 232. I speculate that Danaher would fall to 232, bounce off this support, rallies back to 258 before falling again. So this is how I speculate it would look like. Do bear with me as I go through this chart and change it to a weekly chart. So what I think could actually be forming for Danaher Corporation eventually is this. Danaher first moved lower to 232, bouncing off this support to rise back to around 258, gets rejected and falls lower from there, breaks below 232, and this would fit the notion of a head and shoulders top. This is on the weekly chart. So firstly, we have a bearish confirmation on the daily chart. That's confirmed. Now we're looking for further price action development, which I speculate would eventually form a head and shoulders top. Last week, I talked about Rolls-Royce, closed at 454.2 on the 6th of July. The last video on the 29th of June, I said that it has completed a rising wedge, which is a bearish pattern. The textbook target is at 414.2. In that video, I noted that the 20-day moving average, which is currently at 463.4, the 20-day moving average previously acted as a support. But when it was broken down, it then turned into a resistance. And evidently, we have had 2 days worth of rejection at the 20-day moving average. First one occurring on the 4th of July, which eventually led to a strong decline on the 5th of July. No change to the view, staying bearish on Rolls-Royce, textbook target 414.2. The last review for this video is on Infineon Technologies, last closed at 35.73 on the 6th of July. In the last video, I said that Infineon Technologies appears to have bounced off the cloud support, the Ichimoku cloud support, as well as the 20-week simple moving average. And I said that this should eventually lead it higher this week or upcoming weeks. True enough, we have seen Infineon Technologies bouncing higher this week. Just to note, this week, we also saw Infineon Technologies bouncing off the cloud, the Ichimoku cloud support, as well as the 20-week simple moving average again, which I think will again continue to lead Infineon Technologies higher. Nonetheless, there is no confirmation just yet, as I have said with the euro dollar symmetrical triangles. The outlook will only be determined by a breakout or a breakdown. But of course, right now, Infineon Technologies is biased to the upside after the bounces. And if there is a breakout, this will eventually lead Infineon Technologies much higher. Okay, now that we're done with the reviews, I have new names for you this week. I'll be covering Sterling Swiss, Dollar Yen, Verizon Communications, as well as Wells Fargo. On Sterling Swiss, last closed at 1.1479 on the 6th of July. Sterling Swiss formed two upside exhaustion candlesticks on the 4th and the 5th of July. This could be a head and shoulders top in my view, a bearish pattern. If Sterling Swiss falls in upcoming sessions, particularly if Sterling Swiss closes below the Ichimoku cloud, the support is at 1.1424, then it gives more credibility to this bearish pattern. A bearish outlook will only be confirmed with a daily close below the neckline, which is at 1.1222, and the textbook target is at 1.0765. But again, there is a firm support at 1.09 that can prevent Sterling Swiss from reaching this target. Dollar Yen has been making a lot of headlines lately as yen continues to weaken. Well, that could change. Dollar Yen last closed at 160.76 on the 6th of July, may be forming a rising wedge, which is a bearish pattern. Price action got rejected by the wedge resistance trend line, and directionally Dollar Yen could be headed lower to the support trend line. A breakdown below this support trend line will confirm that the bears have won, and this could result in a potential move of $8.50. Now, I suspect we may not get a breakdown so soon because usually breakdowns happen closer to the apex of triangles or wedges. So Dollar Yen could actually bounce off the support trend line to retest the resistance trend line before moving lower for an attempted breakdown again. But let's see. An early breakdown is of course more than welcome. Another reason why I think Dollar Yen could be headed lower in upcoming sessions is because there is price momentum divergence on the RSI. Looking at the bottom of this indicator, the RSI, I'm pretty sure you're very familiar with RSI, the Relative Strength Index. Generally, how people use it is when there is an overbought condition, it means a sell. When there is an oversold condition, it means a buy. The way I use it is to look for price momentum divergence. What this means is I compare two prices on the chart, one higher and one lower, and check the corresponding RSI over here and over here, which is comparatively lower. So comparatively higher price action versus a comparatively lower momentum. This tells me that there is bearish divergence, and this is usually, not always, usually a sign that price action is going to fall. Moving on to equities, first one, Verizon Communications, last close at 41.72 on the 6th of July. I believe it may be forming a head and shoulders bottom, a bullish pattern. A bullish outlook will be confirmed via a weekly close, because this is the weekly chart. A weekly close above the neckline, which is at 42.58. This will give us a bullish confirmation, and the textbook target is at 55.08. Of course, caution that resistances at 46.25 here, as well as the range of 50 to 51.8. could prevent Verizon Communications from rising to its textbook target. The last name for this video is Wells Fargo. I believe it is forming a head and shoulders top. Now, Wells Fargo last closed at 59.62 on the 6th of July. Could eventually develop into a head and shoulders top, a bearish pattern. I believe it may be or may have already formed the second shoulder, and this needs to fall further, preferably with a close below the Ichimoku cloud support, currently at 58.96. This will give more credibility to the head and shoulders top. A bearish confirmation will be via a close below the slightly slanted upward neckline around 56.56, and the textbook target is at 50.05. Alright, that's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video will highly likely be about new crosses and names. If you like what I'm doing, please help me out by giving me a like. Please subscribe and hit the notification bell button for more videos like this.